Welcome everyone to our program today. My name is Paula Whittakin from the Maricopa SBDC. We're going to wait just a minute to allow participants to join our session today before we get started. And joining me today is Laura Cerna. She's also with the Maricopa SBDC, so she's going to help with hosting and making sure we stay on track today.
Yes, and some housekeeping things just for right now. If you have any questions, be sure to put them in the Q&A box. We will answer those after our video. And also you can also put them in the chat box, although I will strongly recommend that you use the Q&A, because if there is a question that we need to follow up with you about, we can refer back to that and kind of figure out what your question is and be sure to follow up with you.
Great.
And we are currently at 13 attendees, Paula.
Okay, we'll wait just a few more seconds and then we'll get started. We have a lot to cover today, so we don't want to delay too long. All right, let's go ahead and get started. So our session today this is a new series that the Maricopa SBDC is offering our small businesses as we all help to, get through and navigate COVID, navigate today and prepare for what's coming in 2021. So this is our series, Building Financial Strength During COVID. And our topic today, of course, is your business credit score. So let's get started. Of course, many business owners that we work with are not aware that there is such a thing as a business credit score. We all know, the importance of our personal credit scores and how that can impact, you as a business owner as you're trying to, get credit and capital for your business and do business. But there is this business credit score that is just as important. And it's important to know about because just as with your personal credit score, it's important to monitor that score and if things are going wrong, knowing how to get that fixed. So today we are going to talk about, what's this business credit score, how it impacts your business, how and where you can check it, and then how to monitor and fix any issues. Again, my name is Paula Whittakin. I'm the CARES Program Supervisor at the Maricopa SBDC. Just a very quick background on myself. I have been an SBDC counselor for over 4 years now. Previous to that, I was a business owner for 15 years, had a professional consulting business and a small team that worked with large corporations, mostly in the aerospace industry, and helping them develop their training curriculum. And I have a broad range of background as a training consultant. Now, before we continue, actually, let me back up. We want to find out just a little bit about who is on the call today. So Laura is going to launch a poll, and if you could tell us who you are as business, how many years you've been in business. So you should be seeing that question on the screen.
Yes, and we will be leaving the poll up for about 30 seconds to give you guys all time to answer the poll, and then we will also share those results at the end, and it is anonymous.
So Laura, I'll just let you guide me as the poll comes down.
Mm-hmm. We have about 11 of you who have answered. A couple of you still have yet to answer. We'll give you about 3 more seconds or so to answer those, and we'll end the poll. All right, ending poll now, and we're going to share the results. You should be able to see the shared results. So about half of you have been in business for more than 1 to 5 years, and 25% more than 10 years.
All right, great. Thank you for sharing that information. So we've got a little bit of a range all across the board. All right, so very quickly, just a little bit about who we are and the services we provide. So the Maricopa SBDC is part of America's SBDC network. It's a national network, and we're also part of the Arizona network. And our main services are no-fee counseling, training programs such as the one today, and also we have a host of resources which I'll be sharing with you that we provide to our clients and helping them as they're going through their business development. We're able to provide these services because we are funded by the Maricopa Community Colleges here locally. Also, federal funding from the Small Business Administration. And we have our partnership with the Arizona Commerce Authority. And all of these sources of funding help provide these great technical counseling resources, training, and others to you. We have about 17 counselors in Maricopa County. We are all currently working virtually, but we also have 10 SBDC centers across Arizona. So if anyone joining us today is outside of Maricopa County, just know that there are SBDC sources most likely close to where you are that can help you in your business. And just briefly, some of the technical assistance areas that we do help our clients with. Of course, with the disaster loan assistance, we've been helping our clients ever since those programs started, the EIDL, the PPP loans. We'll continue to do that as we learn more about what action Congress may be taking. Also, we help our clients get lender ready. Many of our small businesses now are seeking additional capital as they're going into 2021. So if this is new territory for you, we can help you get lender ready, know what the lender's going to ask you, help you gather that documentation that you will need, making sure you put the best foot forward. We assist with financial review and kind of looking at your resiliency. Maybe you need a resiliency assessment, a marketing assessment, sales planning and strategy. We have experts in manufacturing, technology and commercialization, export and international trade, and the PTAC group also provides expertise in government contracting. So if you may be, given times of COVID, looking how to expand your offerings and your customer segments, perhaps government contracting could be an area that you're looking at. But know that these are all areas that we're helping our clients with, and many, many more. As far as resources, these are different tools that we license for our clients. So we license Growth Wheel, which is basically a whole self-paced network of templates and articles and frameworks that we use in counseling and also to support our counseling with clients that cover all areas of business development. So it's actually a platform online that we make available to our clients. We also now provide access to Live Plan. So we'll be talking a little bit about business planning, but if you don't have a business plan or you need to update that business plan, especially maybe some financial forecasting, we offer Live Plan licenses as that online platform that you can use. We also provide financial benchmarking data through ProfitSense and SageWork. We have our SBDC Net marketing research organization where we can submit custom marketing reports based on what your needs and what we're helping you with. And then we also have access to IBIS Industry World Reports. There again, we're end of the year, heading into next year, and really looking at what's going on in specific industries, and very valuable information, especially as you're planning for what's coming for the year ahead. So just a snapshot view of all these different tools that we have available if you're a client of the SBDC, and again, at no charge. And then we're just about to our content, but I want to make you aware of some of our new training programs and series that are coming up. So in January, we are launching our restaurant series. And this is a series where each month we're going to bring in some industry experts, focus in on different practices and trends. But this will be a format where, it's coming together and you'll have a chance to interact and ask questions and share and learn from others in the industry. So hopefully you'll check that out. We'll have one program each month. We are also launching our series, The Great Marketing Turnaround. And our first topic will be target market update and pivoting for COVID. And the second topic in January will be focused on social media engagement, kind of looking at this paid versus organic and what that means for you and your business. And two more series also launching. Well, actually, this is the first in our financial strength series with business credit. But next month, we're also going to be offering one on cash flow management. And we'll also be offering this topic again of building your business credit. We also will be having a series just to bring you up to date on funding your business during the pandemic. We'll give updates based on those disaster loan programs or perhaps new programs coming up, but also having some conversations around what types of capital is out there, how to get ready, and where to find that capital to give you guidance. So just as you registered for this program, you'll go to our main site. There we have the link on the screen, and you can sign up for any of those programs. And just be sure to follow us on social media, because we often will post on social media as new programs are offered, and just really good information to have as we continue navigating through COVID and as things are changing. We share information with you there. So with that, let's get to the heart of our program today on building business credit. So our guest speaker today actually is Jerry Detweiler from nav.com. And nav.com is a company that provides personal and business credit information. It's kind of like an online platform source, but they provide their informational and presentation materials to SBDCs across the nation so that we can share it with our small business clients. So today's format is actually a recording on building business credit done by Jerry Detweiler. Now, during this recording, you will she'll reference a couple of e-guides. So just know that after the program today, the e-guides that she's referencing, we will be providing to you after the session. So Laura will be sending those emails out, and it will be 2 documents. It's the NAV's Build Business Credit Checklist, and then also the 14 steps to make your business legit. Some really great resources that Laura will be sending to you after our program today.
And Paula, we do have a question.
Yes.
Pat would like to know if we will be covering how to obtain business credit along with how to build business credit.
She does talk about how to obtain business credit with some resources, but if you have more specific questions, perhaps we can address that after the recording is over. So very good. Keep the questions coming, put them in the Q&A as Laura mentioned there. So with that, I'm going to stop sharing this screen, and then we'll go to the recording. So just give me one moment here. And I'm making sure I'm sharing the sound, Laura, so we've got it here. So let me try one more time. Okay. Bear with me one moment. Okay, I think we have it here. Now, Laura, can you see that?
Yes.
Okay, and I will start playing. Let me know if the sound is not working.
Welcome to the webinar, Building Business Credit. In this webinar, you're going to get steps for building business credit, as well as tips on some common hurdles that business owners may have to overcome. Now, you will get the Build Business Credit e-guide, and this will include the steps that we talk about here. So you'll have those to take notes and also to implement the advice that we're talking about. Now, many business owners aren't that familiar with business credit, but it can play a factor in your business success. The Federal Reserve surveys small business owners every year, and in their Small Business Credit Survey for employer firms, these are firms with 1 to 499 employees, they ask them, when you applied for credit, did you use your personal credit, business credit, or both? And in the most recent survey, 12% of business owners said they only used business credit. 48% they said they used a combination of business and personal credit, and 40% said they only used their personal credit score. So both business and personal credit are important. You don't want to overlook one and discover that you aren't getting all the financing options that might be available if you're able to focus on both. But the fact is, many small business owners have never seen their business credit. Survey that Manta and NAV did found that 72% of small business owners did not know their business credit score, and many of them really didn't understand how they could even check or determine what their business credit score was. Now, why does it matter? Well, it can matter in several scenarios. One is if your business needs to get insurance. Some insurance companies will check business credit. A NAV customer was trying to get errors and omissions insurance for his own insurance agency, and he was having trouble. He discovered that his business credit was mixed up with that of another business with a similar name in a different state, and they had bad credit. Once he got that straightened out, he was able to get the insurance that he needed. If your business needs a surety bond, the company may check business and/or personal credit when underwriting. If you're going to look for government contracts, you will definitely at this point need a DUNS number, and we'll talk about that later. And you may also be subjected to a business credit check. Many big firms also will look at business credit before doing business with a company. And then for financing, if you're going to apply for terms or payment terms with your vendors or suppliers, these are often known as net 30 or net 60 terms where the payments due in 30 or 60 days, those relationships often check business credit. Certain SBA loans check business credit. An example of this in 2020 was the Economic Injury Disaster Loan, where the SBA did a business credit check for applicants who were looking for $250,000 or more. Some banks will check business credit. Sometimes they do it in the underwriting phase. Sometimes they do it to review loans that are already outstanding. And equipment lending or equipment financing applications may also involve a business credit check. And NAV did a survey a few years ago, and they found that business owners who understood their business credit were 41% more likely to be approved for a business loan. Good business credit isn't a guarantee you'll get financing, but it can help. And so it's important to make sure that your business credit is accurate and up to date. Now let's ask you a little bit about what you know about business credit. Of these 4 credit bureaus, which one of them employed 4 former U.S. presidents? Which one of them do you think employed 4 U.S. presidents in the past? And bonus points if you can guess what very famous president worked for one of these credit bureaus. The correct answer here is Dun & Bradstreet. Dun & Bradstreet has been around since the 1850s, and Abraham Lincoln was a reporter for Dun & Bradstreet back in the day. In fact, Lincoln, McKinley, Grant, and Cleveland all worked for Dun & Bradstreet at some point as reporters, meaning they would gather information from merchants about how their customers were paying their bills and then transmit that to Dun & Bradstreet so it could be shared with other merchants who wanted to check credit. Now, there are 3 major commercial credit reporting agencies you'll probably want to have on your radar. One is Dun & Bradstreet, which we just mentioned. Equifax, which you may know as a consumer bureau, also has a commercial credit bureau where they keep information about how businesses pay their bills. And then Experian also has a business credit bureau where they keep information about how small businesses and other businesses pay their financial obligations. Now, there's another one you may just want to have in the back of your mind because it could impact your business's ability to get financing, and that's the Small Business Financial Exchange. Now, the SBFE was created by many of the major lenders because they wanted to share information about how their customers were paying their business financial obligations like lines of credit or equipment leases, but they were concerned that it might end up being used for marketing purposes, which they didn't want to happen. So they formed a cooperative. The SBFE doesn't create credit reports, but what it does is it collects information from primarily its members, and then it shares that information through what they call certified vendors or credit bureaus that are authorized to sell credit reports that contain this information. So they sell it currently. Their certified vendor partners include Dun & Bradstreet, Equifax, Experian, and LexisNexis. Now, you as a business owner probably won't see this credit report unless you are turned down for credit based on information in that report. Then you may get a notice that entitles you to check that report. But it's generally not available to business owners who just want to proactively check and view what's on their SBFE, what's in their SBFE data. Now, there are some additional credit data sources you may come across. Info Group, they power a lot of search engine results about businesses, and they also sell certain reports. LexisNexis, which is well known for insurance information, both on the consumer and the business side, but they also have commercial credit data. Credit Safe, which is an international credit bureau and is really marketing more heavily in the US recently. And then the post office is not a credit bureau, but it's important to understand as a business owner that alternative data, non-credit bureau data, can be used to help evaluate your business. There's no restrictions on the use of alternative data like there is on the consumer side. And so at one industry conference, the CEO of a major online lender reported that their company could make credit decisions based on linking to the business's shipping account and seeing how many boxes they're shipping, how often, what size, etc. So you as a business owner need to understand that the information that's out there publicly about your company could impact your ability to get financing. One example is Experian has released a social media score for small business that will evaluate the small business's social media accounts. And there have been reports of lenders who will check a business's social media before closing a loan. And if they see a lot of negative information on those social media accounts, such as bad reviews, etc., they might decide not to extend that financing. So whatever is out there publicly about your company is important, and it's important that you stay on top of your business's reputation. Now, what's in an actual business credit report? Well, much like a consumer credit report, it's really a record of how the business has paid its bills. It'll have a couple of main sections. One will be information about the business that might include the business type, where the business is located, maybe number of employees or sales. That information isn't always considered super reliable, but sometimes it is available on those reports. And then it will contain information about the individual accounts that the business has and whether those accounts are paid on time, how much is outstanding on those accounts, etc. And then there may be public record information. And public record information is anything that could appear through the courts. And it could be things like tax liens, judgments, bankruptcies, or UCC filings, which we'll talk about in a moment. Collection accounts may also be reported in that section. Now, business credit reports and personal credit reports are often quite different. It's often a very different experience checking your business credit for the first time. So with consumer credit, we have very strong laws in place that protect the privacy and the accuracy of consumer information. They give you the right to dispute it. They give you the right to see a free credit report every year. They limit how long negative information can stay on the credit report, etc. And with most people, if you check your consumer credit report from the three major consumer credit bureaus, Experian, Equifax, and TransUnion, chances are they're going to be pretty similar. Sometimes you'll see something that might pop up on one and not on the other, but that's not a very common occurrence. On business credit, it's not unusual at all to see very different credit data and very different credit scores. They can vary significantly, and we'll talk about those differences in just a moment. Now, the first major difference with business credit and personal credit is that business credit reports don't name creditors. So you won't see the name of the company that issued your credit card account, or the company that you get your cell phone service for your business through, or the company that provides your business utilities. They will just categorize them by type of account, but not by name. Second, there are no credit limits reported. So if you're familiar with the concept of utilization or debt usage on consumer credit, Many consumer credit scores will compare your balance to your credit limit. And the closer you get to your credit limit, the more it can impact your credit score negatively if you become maxed out on a credit card. Now, not all business credit scores use the debt usage or utilization ratio, but when they do, because there's typically no credit limit reported, they often substitute the highest recent balance. So whatever the highest recent balance reported on the credit bureau, that's going to be substituted. And it depends on the credit bureau how long they'll go back for recent high credit. So it's a little bit trickier with business credit, but keep in mind that this factor is not a major factor in most business credit scoring models. Now, payment history also differs. So with your consumer credit report, you probably see a 24-month, month-by-month report of each month and whether you paid on time. And sometimes you get that with business credit, but sometimes you just get a summary of the percentage of time that you've paid on time. So you don't actually get a month-by-month blow. So if it does show that you were late, you may have to do some tracking, some investigation to figure out exactly when it was that they're reporting you as late on that account. And then, very importantly, free credit reports are not required on business credit. There's no law that requires them to show you a free credit report. So for the most part, you're going to be charged to get your business credit reports directly from the bureaus. Dun & Bradstreet does have a product called Credit Signal that will give you some free information about your business credit. And then the other place you can get your free business credit is from NAV, and we'll talk about that in a moment. Now, business credit reports get started a little bit differently sometimes than consumer credit. So with consumer credit, typically it starts when you get your first account that reports. So you get a credit card or a mortgage or a student loan. That information is transmitted to the credit bureaus and it opens up your file. With business credit, that sometimes happens. That's how it works with Equifax, for example. But with Dun & Bradstreet, the first step is typically to get your DUNS number, which is their identifying number. And then Experian will pick up certain information from state filings. So if you've incorporated and that information is publicly available for your state, they may pick that up and open the file that way. So you aren't actually proactively opening a file with Experian or Equifax, but it can happen in the other direction. Now, the common question we hear from business owners is my EIN, my employer identification number, is that the same as my social security number is for business credit? And the answer is no. Each bureau creates its own identifying number for each business in its database. So with Dun & Bradstreet, it's called a DUNS number. With Equifax, it's called an Equifax ID. And with Experian, it's called a BIN or business identification number. And the only one you can proactively request is a DUNS number. We'll talk about that in a moment. Question for you. What is a good business credit score? What do you think would be a number that would constitute a good business credit score? Very commonly, business owners will guess 680, 720, they're 800. They're thinking of the consumer credit scores that they're used to. But business credit scores can run on a different scale. So Experian score is called IntelliScore. We have IntelliScore and IntelliScore Plus, but it's always 0 to 100, 100 being the best score you can get. 80 to 100 is a great range to be in. Dun & Bradstreet's flagship score, the one they're probably best known for, is called PAYDEX, and that's 0 to 100. Again, 80 to 100 is an excellent score. 70 to 100 is a very good score as well. Now, Dun & Bradstreet also has other scores, though, and they run on different scales. So you can't say that the 0 to 100 is the only scale for Dun & Bradstreet because it's not. It depends on the score. Similarly, Equifax has a number of different scores. One example is the delinquency score, 224 to 580, but there are other scores. So one tip for you as a business owner is if you are checking your business credit, always make sure you figure out or look at what the score range is so you can get an idea of where you fall in that range and see whether your score is considered excellent, good, fair, or needs some improvement. With a free NAV account, you'll see letter grades, A being great, you're doing great, B being very good, could use potentially some improvement, etc. So that's a shortcut for understanding the range where you fall in with that service. Now, there is a special FICO score just for small business. It's called the FICO SBSS score, and this score ranges from 0 to 300. 300 is the best score, and 0 is no score. And this score is used primarily by financial institutions, and it's also used in underwriting certain SBA loans. So SBA 7A loans, 7A is the most popular program that of loans that the SBA offers, for $350,000 or less require what's called a pre-screen, where the first thing the lender has to do is pull this score. And the SBA's minimum score is 155 out of 300. If the borrower meets that requirement, then they don't have to go through a manual approval with the SBA. They can go through what's called delegated authority. So that score, again, requires 155 out of 300. Many lenders want to see 160 or 165 or above. Now, what's interesting about this score is it can take into account personal credit data of the owners, and any owner with 20% or more ownership will be required to have a credit check under the SBA requirements. May vary under other lender requirements. It can pull in the business credit data of the business, and it can even add in financial information. So that score can bring into play several different types of data. And some consumers or some business owners will have an excellent score just based on excellent personal credit. But it's a lot easier to get a high FICO SBSS score if you have good business credit and good personal credit. So how do you build business credit? Let's go into these steps here. And again, remember, these are summarized in the e-guide that you received. The first step is, ideally, you want to create a business entity, such as an LLC, S Corp, or C Corp. Now, it's not required, and we'll talk about what to do if you're still operating as a sole proprietor. But if you think about it, until you have a separate legal entity for your business, there's no true way to separate business and personal credit. It's always going to be intertwined because there is no other legal distinction between you and your business when you're not an incorporated business. Again, LLC, S Corp, C Corp, PA, whatever structure is correct for your business. Now, if you do decide to continue operating as a sole proprietor and you want to build business credit, a couple of tips. First is register your business name. So choose a business name that you want to stick with, make sure it's not infringing on anyone else's trademark, and then register that with your state. In many states, it's registered as a fictitious name or a doing business as a DBA. And that gives notice that that business name has been saved. Apply for an employer identification number, or EIN, from the IRS. This is like the Social Security number for your business. It is required for certain businesses, but not all. But go ahead and request the EIN, then you'll get it assigned by the IRS and you'll have that letter. And then obtain any required business licenses in your state for your business, so you're operating correctly in your state. And then whichever those dates is sooner, whether it's getting the EIN or registering the fictitious name, you can use that date consistently as the opening date for your business, which we'll talk about in a moment. What is your industry? So this can be important because certain lenders will lend into certain industries and they won't lend into others. It also comes into play if you're looking for an SBA loan. The SBA has certain size standards for certain industries, and you can actually look those up on the SBA website to determine if you qualify to apply for an SBA loan based on the size of your business. Now, the old codes are called the Standard Industrial Classification Codes. These were the original codes created by the government for statistical tracking purposes. The NAICS code, the North American Industrial Classification System, is an expanded classification system that builds on the SIC codes and basically drills down deeper into certain codes. Either one may be used to to evaluate whether the industry that you're in is what the lender is planning to lend into. However, you'll often see that the NAICS is the more recent and more widely used code. Your business credit report may list both the SIC and the NAICS code, or one or the other. Make sure it's correct, and if it's not, you may need to dispute it. Quick example, an NAV customer manufactured real estate signs, the kind that realtors put in the front yard when they're trying to sell a house, and they were having trouble getting financing. It turns out either their NAICS or SIC code identified them as a real estate business, not a sign manufacturing business. When they got it corrected, they were able to get different financing that wasn't available as a real estate business. So it doesn't necessarily mean one is better than the other, but it should accurately identify your business so that you do get the offers from companies that are trying to offer financing to businesses like yours. Step 2, get a business bank account. So this will not show up on your business credit report, but it's almost like its own credit report. Your business bank account is really essential for many lenders. Many lenders will require a business bank account, will request bank statements, or will analyze your bank statements by linking to your bank account to analyze that data. And so it's very important that you have a business bank account in order to get the widest number of options when it comes to financing. And many of the better options do require a business bank account because they're going to analyze that information. You need to make sure that your business is set up to look legitimate. So there's a number of different steps you can take here, and we will provide you with the 14-step checklist to make your business legit. But basically, you're going to need an address for your business, and that can be your home address if you want it to be and if it makes sense for the business. But if you want to separate your business and residential address, you may want to get a PO box that gives you a real street address and use that for your business. You'll need a phone number for your business, ideally, and you can actually get that listed with directory assistance through a service called listyourself.net. This is on the 14-step checklist that you can download after this presentation. You can use your cell phone for your business, but it's highly recommended you use a service that will let it ring as separately as your business. So you can actually get services for a few dollars a month that will assign a business phone number and it'll ring on your cell, but you'll know it's a business call. You can answer it as a business call. You can leave a message as a business call, and it just separates your personal and business, your personal calls and your business calls, and makes your business appear more legitimate. And then you'll want to have a website and a professional email address. Even if it's a one-page website with your own domain name, that's very helpful to set your business up as a legitimate business. You can take your contact information and then get an email address with that domain name. So using common generic email addresses like Hotmail or even Gmail is not ideal for your business. You can get an email address with your website url.com or .co or .biz, whichever you choose to use, and that just separates your business as more legitimate. Then request a DUNS number if you don't already have one. So you can check with the Dun & Bradstreet website, or if you have a NAV account, you can check in the Business Launcher tool in NAV and see if you already have one. Your business may already have a DUNS number. If it does not, you apply, and it can take anywhere from about 10 to 30 days to get assigned a DUNS number in the Dun & Bradstreet database. The reason you can proactively get a DUNS number is because this number is required for federal government contracts and federal government grants. And so they have the interface for a business to be able to request it if they're going to be applying for either of those. In the future, the federal government will be switching to something called a SAMI number, but that has not happened yet. So in the meantime, a DUNS number is the number you need. And then the heart or the meat of building business credit is to have accounts that report payment history. So you want to establish accounts with businesses that will report to business credit. And you may check with your existing suppliers and vendors to see whether they report or whether they will report your information. If they don't, you may need to go out and actually establish accounts with companies that report. So nav.com/vendor vendors will take you to an article that lists vendors that are easy to get, that typically do report to business credit, don't report to personal credit, and typically don't check personal credit. Now, sometimes you'll have to make a couple of purchases from those vendors first to establish that you're a legitimate company, but then you can apply for net 30 terms, which gives you 30 days to pay for the items that you need in your business. So these companies offer everything from business cards to Keurig cups for your coffee machine, to sanitizing supplies, to shipping boxes, ink, printer ink, etc. So you can buy things your business would need anyway, pay them off on time, and build business credit. Another way to build business credit is with business credit cards. So most small business credit cards do report to at least one of the major commercial credit reporting agencies. And this article here, nav.com/business-reports, will take you to a list of the small business credit card issuers and which credit bureaus they report to. So that's a way to help build business credit as well. Then pay on time. It's even more important with business credit to make sure that you have systems in place to pay those bills on time. Business credit reports, when reporting payment history, often use something called DBT. Do you know what DBT stands for? It stands for days beyond terms. So if you have an account with a vendor that's net 30 terms, which means it's due on day 30 after the invoice date, then if you pay on day 32, you're 2 DBT. If you have net 60 terms and you pay on day 62, you're still 2 DBT. This is very different than consumer credit, where it falls into 30-day buckets. Now, according to Experian, at least a couple of years ago, the average DBT nationwide was 11. So if you miss a payment by a day or two, it's not likely to drop your credit scores like a rock the way it would with personal credit if you get reported late on a credit card, for example, for the first time. However, when you're building business credit, it's very helpful to pay on time so that you can establish a solid payment history. So just try to set up systems so that you don't forget about or miss a payment because you get busy or because some fire or some emergency happens in your business and you forget to make that payment. Next step is to make sure that you fix mistakes. So Wall Street Journal study a few years back showed that business credit reports, about 20-25% of them contained errors or omissions that were serious enough to cause the business to either to not get the credit that they needed. And so you want to make sure that yours is correct. Now, most business owners aren't checking their business credit. So if there is a mistake, they have no idea that's happening. And it is very easy for a business to get mixed up with another business, often with a similar name, maybe even in a similar geographic area or state. And that information could inaccurately hurt that business's ability to get credit. So checking your credit and fixing mistakes is very important. Now, there's no law that governs business credit report disputes. So each bureau handles it differently, and you'll have to go by their procedures in order to dispute that information that you believe is wrong. And then finally, it's important to monitor your credit. There's been an alarming increase in the past couple of years in business fraud and business identity theft. And even businesses that are winding down because of the coronavirus or other cash flow problems are finding themselves sometimes victims of this type of fraud, where another business will go in, use that business's information, open up credit lines, get goods, products or goods shipped to them, and then never pay the bills. And this is a real problem. You can't freeze your business credit. You can't place a fraud alert on business credit. The one thing you can do is monitor your business credit so that if something unusual pops up, you'll be able to act quickly to try to stop the crooks from further using the name of your business to get credit. So here are the top three challenges that many business owners find when they check their credit. One is a lack of credit data, another is negative information, and another is wrong information. So it's very common for a business that's even been in business for years, a decade or more, to have no business credit because they aren't doing business with companies that report. So there you can use the tips we mentioned earlier, including getting a business credit card and getting vendor accounts. In addition, there's a service that for a small monthly fee will add accounts you're already paying, like insurance payments or utility payments, to some of your business credit reports. And you can learn more in the article at nav.com/add-accounts. That may be something you want to supplement with. In addition, if you have a NAV account, most business owners use a free account, but a paid NAV account actually can report to the business credit bureaus. A Business Boost or Business Manager account will report to Equifax, Experian, and Dun & Bradstreet each month. So it's never negative, because as long as you have that paid account, that payment will report. If you decide to downgrade back to a free account, it will just stop reporting, but it won't report anything negative. And then you may find collection accounts on your business credit reports. Make sure that these are accurate. Make sure that if it doesn't show that if it shows a balance, but you've paid it, that it shows paid in full, as this example shows. You want it to be up to date, and sometimes that information is outdated. You may see UCC filings on your business credit. In fact, this is something you should check for. And it isn't necessarily negative, but it could impact your ability to get financing. Here's what it involves. A UCC filing is a filing under the Uniform Commercial Code. And that's where a creditor will file a report in the public record that says, or file a UCC filing in the public record that says, we have a legal interest in the property of this business. In other words, if the business doesn't pay back what it owes us, we have the right to this property. It could be a UCC filing tied to a piece of equipment that you're leasing under an equipment leasing arrangement. It could be all receivables if you're getting some type of financing tied to the money that your business brings in. If you got an EIDL or economic injury disaster loan due to coronavirus, the SBA places a UCC 1 filing for loans above $25,000, for idle loans above that amount. The UCC filing, other lenders will look at that and will decide whether they feel comfortable with the collateral that's available to them if they extend you financing. So if they see multiple outstanding or open UCC filings, they might be concerned about whether that is something they feel comfortable going behind. Now, what we've seen at NAV is that business owner or these companies will often place the UCC filing, but then when the financing or debt is satisfied, they don't always file the release. So it's not always noted, it's not always updated to show that it's been satisfied or released. And so that is something that the financing source would need to update with the court to make sure that it reflects that that is no longer an outstanding debt and they no longer have that interest in the property of the business. Bankruptcies may also appear on business credit reports. And interestingly, some business credit reports will pick them up, some won't. It depends on the credit report and the credit reporting agency's policy and the type of report it's telling whether or not it will pick up that bankruptcy from the public record. Tax liens or judgments typically do not appear on consumer credit reports anymore, but they do appear on business credit reports. And here you want to make sure it's accurate again and up to date. Similar to UCC filings, sometimes the companies that have judgments against other companies don't always file a release and satisfaction when that debt has been satisfied. Similarly, a tax lien could be out of date and may appear as though the tax lien was still outstanding, even though it's been satisfied. Now, how long does negative information appear on business credit reports? Now, on consumer reports, it's typically 7 years, sometimes up to 10 years for certain types of bankruptcy. On business credit, there's no requirement in terms of how long they can report it. So these are the policies that the credit bureaus have stated they go by when reporting negative information. This is the maximum length of time that they say they will report negative information. They could report it shorter, and they could legally report it longer. It's just their decision on how long they want to report that. Another factor that can impact your business credit score is your time in business. So there's two things that the score may look at here. One is the time in business, and that's when the business was started. So remember, we talked about the importance of having an official start date for the business, because time in business is important for many lenders and may impact your credit score. There's also something called time in file, and that would be how long accounts have been reporting on the business. So that's why it can be helpful it's one of the reasons it can be helpful to establish business credit before you need it. It's typically not an overnight process. It's something that you do need to be proactive about establishing early on. Inquiries are typically not a major factor in business credit scores. Some, like Paydex, doesn't matter at all. Others, like Experian, will count the first one, but not multiple inquiries after that. This doesn't mean you should apply anywhere and everywhere, because sometimes there will be a credit check of the owner's personal credit, and those inquiries could potentially impact the credit score. But it generally means that most commercial financing inquiries are not going to be a factor or a major factor in most credit scores. Now, finally, there's one other thing to think about when it comes to business credit, and that is how you use business credit to protect your business. We've talked about how to use business credit to open up financing options for your business and to protect it from fraud, but you can also use it to protect your business. Example is the co-founder of NAV, Levi King, started a sign manufacturing business in Idaho in his 20s. And he had a client that was a local chain of Mexican restaurants. It was a pretty big client for him, but it was also a pretty big headache for him because that client was always very, very slow to pay. And so Levi would install a sign, get some money up front, then have to chase him for the rest of the money. And then he wanted to do another sign. And finally, one day he decided to fire his client. He said, "This is how much you owe me. I'm done." Turns out he had burned his bridges with every other sign manufacturing business in a reasonable distance and had no choice but to catch up and become a better client going forward. If you as a business are providing anything up front without getting paid in full, you're a lender. Could be your time, could be your goods, could be your services, whatever it may be. But if you're not getting paid in full up front, you're a lender and you need to think like a lender. This is also important if you're thinking about going into business with a partner, or if you have a key supplier who might, if they went out of business, could really jeopardize your supply chain and your ability to fulfill on your sales that you're trying to conduct. So you want to think like a lender. And what do lenders do? They check credit. So you can't check personal credit on just anyone, but you can check business credit on any business. And so you may want to check business credit on those key businesses as well, so that you can help protect yourself. If you see that they're not paying other companies on time, or you see tax liens, judgments, or other problems, then you probably will want to either ask for money up front or spend your time on a better qualified client. Levi King, who we just shared his example of the signs that he manufactured, he also once wrote a $5,000 check to a marketing company, and within weeks, the marketing company filed for bankruptcy, and he never got anything for that check that he wrote. So again, checking business credit can help protect your business as well. Now, you can check your business credit for free at nav.com. So this will allow you to check your business credit with Dun & Bradstreet, Equifax, or Experian. You can also set up a free NAV account even if you don't have your business credit established, and you'll get tools in the account to help you build business credit. You will be asked to verify your identity because the NAV account does include your personal credit from Experian as well. So with that credit data from the business credit bureaus and your personal credit, NAV will match you to financing offers. It's a soft credit check. It doesn't impact your credit scores. And NAV will not sell your information to lenders, so you won't get phone calls from lenders just because you sign up for a NAV account. But this is a way to check and monitor your business credit on a regular basis. You can get an updated report and score every month when you log into your NAV account. I hope you found this information helpful. Again, there's 2 e-guides that you'll get, the Build Business Credit Checklist and the 14 steps to make your business legitimate. And with those, you should be on track to building and maintaining strong business credit and hopefully increasing the financing offers that you get as well.
All right, so I'll stop the recording and I'm going to reshare the PowerPoint that we started with. And while I'm doing this, if you have any questions, please make sure to put those in the Q&A box. And so just a couple of things, just to give you some time to put some questions in. You've got a lot to think about now as far as business credit, but just some other things. You know, we're continuing through COVID. 2021 is just around the corner. So some additional things for you to think about the business. You know, what are you doing? You know, think about what you're doing to build your financial toolkit and put that in order. Today, we talked about business credit, but think about maybe the financial statements, income statements, balance sheets, cash flow, financial projections. Do you have a financial toolkit in place? Do you know really how to use it, you know, to help you make those business decisions? So this is something I talked about, SBDC services that we can help you with, and we will be addressing in upcoming training programs. So think about that. Also, you know, most of our small businesses are really searching for ways to pivot and innovate during COVID. Continue that search, you know, look at your customer segments. What can you do to pivot and change? Look at your products and service offerings. So continue that. Again, SBDC counselors are here to help you with that. You know, you can update your marketing plan and also update and develop your business plan. We actually have a program coming up tomorrow on business planning. So if you've not done that, this is the best time to do it. You need to stay ahead of the curve, you know, especially as you're using those finances and that you have in place to help you continue through COVID and see it through. So with that, let me see if we have some questions. Laura, do we have some questions in the Q&A?
We have just one question. It's from Pedro. What are top 3 credit challenges?
Okay, are you talking about what she referred to in the presentation? Right, so it was not even, you know, having any business credit where you've not really even started a file. Maybe you don't have that DUNS file. Just failing to monitor that credit. And then I'm drawing a blank on the third. Now it's like stump the facilitator, but let me see if I can just quickly find that screen for you, because I do have her presentation here ready. So let's see if I can find those challenges. As I recall, they were towards the end. So let's see here. Oh, the top 3 business credit challenges. It was lack of data. And can you see my screen, Laura?
Yes.
Yes. Okay. It was lack of credit data, negative information, and just wrong information. So there again, it comes back to reach out to those credit agencies, see what's in that report, and then take steps to see if you can get that fixed. So hopefully that helps in guiding. And just know that we're recording this session. And so if you want to go back and revisit the recording, it will be up on our YouTube channel. So you can refer back to that. Were there any other questions? Go ahead.
That link will be sent out to all the attendees today.
Right. Any other questions in our Q&A? I know we're just up at the top of the hour.
No more questions.
Okay. All right, so with that, let's continue forward. And Laura, I'll turn it over to you.
Okay. So a lot of you have put in the Q&A that you would like to request counseling. So you can do that on our website, www.maricopa.sbdc.com. And there is a small box at the bottom left hand that says request for counseling. That'll take you to our request for counseling form. So be sure to fill that out if you are interested. Another exciting thing on our website is our counselor biographies. So you can read up on counselors, see their background. Paula's on there as well. We also have our training calendar that is up on our website. It is current with our current upcoming webinars. As Paula mentioned, we do have our business plan webinar scheduled for tomorrow. So be sure to check out our calendar events and sign up for that upcoming webinar. And then the last thing is make sure to follow us on social media. That is another great place to get the most updated information about our events and our webinars that are coming up as well.
All right, and with that, everyone, thank you for joining us today. And just to close us out, Laura will launch our evaluation.
Yes. Oh, I do have one more question that popped up in our Q&A, Paula.
Okay.
What are 4 steps in setting up a business? And in step 3 again? Oh, step 1. What are, I'm sorry, Pedro. I think you might be able to unmute yourself.
I think if you're referring to the steps that Jerry was taking us through, those are actually in those 2 e-guides that we'll be sending out to you. So you can refer back to the steps that she was talking about, setting up a legitimate business and what you can do to set up your business credit and check your business credit. So you'll have access to that information.
And again, this webinar is being recorded and it will be sent out to all of you who have attended. And so at the end of this webinar, there you will get a evaluation to complete. This is going to help us to know how we can better support you and your businesses, especially during this time of COVID. So we really appreciate you taking the time to complete the evaluation that will automatically pop up at the end of this webinar.
All right. Thank you everyone for joining us today, and we hope to see you at a future webinar.
Yes, thank you. Bye.